Hello everyone, Clifford Bennett, Chief Economist at ACY Securities, and there is a lot happening in markets and a lot of people are wringing their hands and saying what a disaster, stocks are crashing, it all looks a bit ugly, what's going to happen over with Russia seeming to up the ante in terms of the conflict in Ukraine. All this stress, you don't have to be stressed, you just have to be short. We've been telling you to sell all year. So I hope those of you out there who've been watching our program all year, congratulations. You should be doing extremely well. In fact, you should be having one of your best years ever, which is a fantastic thing to do in a declining stock market because it means you're getting richer as the price of assets get lower. You combine those two things, you have a new quantum level of investment power at your fingertips available to you. And of course, you can access various asset classes across the globe with just at your fingers. It's just at your keyboard. I know, it might even just be on your mobile phone. It's a fantastic period. Is at the bottom of the stock market from someone who's got it right this year. Well, I can't get it right all the time. I got it wrong in June, the first part of August, but we are still getting it right. Now, I've put out a couple of reports last week saying we are at risk of a very sharp decline in stock prices. So in other words, we've seen stock prices kind of struggling to the downside all year. And I said in the first week of the year, we're going to have a 3 to 6 month equity market correction, which could tip over into a 3-year to 6-year correction. So that seems to be the developing scenario. It's not quite the most likely scenario yet, but people need to be aware this isn't something that's going away tomorrow. I have kept highlighting, as one of the world's better economic forecasters, I've kept highlighting that this economic downturn has much further to run. It's going to become a lot deeper, and there is no end in sight to the turnaround, to the bottom of the economic correction. And asset classes across the board, including especially the stock market, have yet to price in even the economic slowdown we've already seen in the world, particularly in the United States and Europe, and increasingly the UK. They haven't priced that in yet, what's already happened, and yet the economy is going to go even lower. And again, I will make the distinction to you that in the GFC, the economic slowdown was generated by absurd investment bank behavior on Wall Street, which triggered an unwinding of banks and therefore their loan books and therefore foreclosures. So it was a financial market, Wall Street driven global financial crisis, although obviously China and Asia didn't experience it as anywhere near to the extent that Europe and the United States did. Whereas this time round, it's a bottom-up economic slowdown. In other words, manufacturing around Asia, around the world is slowing. We've just seen even the services PMI in the United States, one of the global indicator PMIs there, not the official PMI data, or the long historic PMI data, but the more recent private survey saying that services have just contracted in the United States for the 3rd month in a row. Now, we know the manufacturing slowdown is there. Manufacturing and factory activity is either in contraction or barely expansionary, depending upon which part of the United States you look at. But it's not a healthy or strong economy, most definitely. So we're looking here at a worsening economic situation with stock markets having to play catch up and then do what they always do, which is overshoot, either to the upside or the downside. And on this occasion, it's going to be to the downside. That means there's an awful lot of opportunities still to the downside in equity markets. So if you want to have a fantastic year, be aware that it's good to be positive And positive does not mean being bullish. Positive means you can make money in all kinds of markets. And that's the approach I personally like to take. So I'll just leave you with the idea that the yen could be a buy here. Sterling probably has further to fall. Again, those who follow me know that I forecast sterling would go to parity quite some time ago. It could, and I'm still forecasting sterling will go to parity. It's already down at 105 area. So almost there from where the forecast was made. But it could also overshoot to around 0.95. There's not really any good news for Europe or the UK at the moment. I forecast the euro would go to 0.97. I made that forecast last year for this year. We've done that. And I said a couple of months ago, the risk is actually could be as bad as 0.88 for the euro. So just be aware of that risk. For the Australian dollar, last year, December, I forecast for this year 65 cents, risk 58 in 2023. Clearly, we're going to see our 65 cents that risk to 58 cents could be brought forward into the end of this year. So still a lot of downside for currency markets, a lot of upside for the US dollar. At some point, you will have the G7 have a serious meeting about this currency dislocation that's been occurring. But out of that and leading the way, I think you could see the yen begin to appreciate. We know there's been intervention. Intervention doesn't always work. I've sold directly on behalf of investment banks directly to my proprietary trading within large global investment banks to the Bank of Japan. And when the broker, I'm sort of selling it to the spot dealer saying, sell another 50 million, sell another 50 million. And this interbank spot dealer is in the investment banks yelling back at me, it's the Bank of Japan on the other side. And he's thinking we have to panic and buy. And I go, sell more, sell another 50, sell another 50. And then the market dropped 10% that day. Okay, so central banks don't always win. On this occasion, though, when I think the yen has overshot quite a lot, so I think maybe respect this Bank of Japan intervention a little bit. It doesn't mean they'll hold a line in the sand, but it could be a buy overall, particularly against the euro or sterling. Have a great day. Thank you very much for listening in. I wish you all the best in your trading. Clifford Bennett, Chief Economist, ACY Securities.